Can we have the slides? Okay. We're going to proceed here. I have to manually. Can we put the slides up? Last year at the Project Developers Summit, there was this very engaged conversation about how can we improve this very difficult project development process, right? We said we've got to get the facts on the ground. We've got to find a way to better figure out and translate the blood and guts on the ground as you work 5, 7, 10, 12 years. Somehow bring it together in some kind of snapshot, quantitative manner, even though we know it's never correct, but to be able to express the challenges and capture where some of the actions are, where the public and private sector need to work together. So what the Private Project Developer Forum did is work with technical support from AI Capital and the Global Clearinghouse for Development Finance, which is the non-for-profit I run, to create this benchmark. And I'm really excited that we're going to do it together as a dance, Vishal, and we haven't practiced before, so this is going to, you can giggle at it, okay? Vishal Agarwal, who has really suffered in the field, doing good work as the head of GE's, it's called Development and Investments.
That's right.
So, okay, so we're going to do this together, okay? So, we're going to go through this. So, okay, you wanted, you do that one, you do this one, you push there to go forward. When I move this one, you do that one.
Oh, you want me to do some work? Okay.
Yeah,
Okay.
yeah, okay.
There you go.
And here is your mic.
I've got one.
Oh, you've got one, okay. So we talked about that. So what's the issue here, okay? For those of us that have struggled with project development, it costs a lot of money, generally 5 to 12% total project costs. How can we make it better? Some of the key things we need to think about is, how can we increase the probability of financial close? We can't even begin this process if we really, despite our enthusiasm, don't believe that we can get to the end point. And in order to make more scale projects, we've got to reduce the time frames and we've got to reduce the risk. So how do we actually drive down the cost of finance? We've talked about earlier today. We've got to somehow raise more finance. You talked about co-investment. We talked with our friends Africa 50 and the like. We need to figure out how we can crowd in each other, including other development partners. And we need to engage those providers of equipment and services through the whole project development process and get that engine, that interest working to build momentum and results with project development. And of course, if we don't do this, we're going to fail terribly. And all you have to do is look at the last available PPI database in 2015. The numbers are bad for Africa. Now, Alan, I took the sub-Sahara PPI numbers. For 2015, it was only 6.3 billion for Africa. That's 6% of total private investment for infrastructure. But when you look deeper, it's even worse. Because of the only 23 projects, 16 were in South Africa. Okay, so you have this concentration. Not only were they in Africa, they were in the REAP Renewable Energy Program. So, you know, you can see when you have an enabling environment, you get the pipeline and you get scale. But we're missing a lot of the continent, right? So the objective of, Hubert mentioned it before, investing in project development benchmark, we call it I4PD, was to try, and we have to really thank everyone who participated, because I know a lot of people here suffered. It was a very complex survey. It was painful. But project development is painful, so we had to replicate it. So we wanted to, first of all, focus on the bigger ones. We could do another benchmark for small ones because they're even harder. But we said we'll do projects 50 million total cost or higher. So we want to isolate the key practices and requirements. We want to get input directly from the professionals that are actually doing the work, okay? And we want to ask the questions in a way that helps us understand how to create an engine. That's how we get projects done, right? What are the factors that are going to increase the mobilization, not just of capital, but the expertise? Without the expertise, these projects are never going to be bankable, investable. And think about how do we crowd in project developers so they actually move ahead with that. And what we talked about yesterday as well, in this case, we're not just talking about the investment ecosystem, we're talking about the project development ecosystem. And then, how do we engage the public sector in actually creating infrastructure enabling environments? All the things we talk about. The regulatory certainty, so we know we have cash flow from those offtake agreements, okay? So, the methodology was standard academic. We get input from the leading practitioners and providers. The process, and a lot of people that are outside of infrastructure don't understand how complicated and long the project development process is, from inception to close. We focus on challenges and requirements. We have 8 pillars: project development efficiency, government-related impediments to project development costs, project development funding, project developer compensation, infrastructure development impact, sustainability and social impact, local stakeholder inclusion. Okay? Now, we're not going to give you the whole thing. URID staff is going to send you the 80-page report, okay? And you have a summary in the AI magazine. But what we're going to dance around are just some key points. And I'm going to throw the data up, and you're going to dance.
Fun.
Sound good? Okay. So what's the key point? Hubert talked about it earlier. We, in order to get, it was really important to get regional comparisons. So we asked the people who were responding to respond in their area of expertise and practice. So if you were just doing infrastructure in Africa, you answer Africa. If you're also doing deals in Asia, you answer Asia, Latin America. So we have a comparative regional benchmark. It was very interesting that the average responses on the questions on required internal rate of return for Africa were 16 to 20%, okay? With a longer time frame for development, an average of 5 years, with again, some way out there in the 12, 15-year space, a very high failure rate, 80%, that higher internal rate of return was for local partners as well as strategic partners, and a little bit higher for international financial partners. And all other developing country regions was 11 to 15%. So when you look at it, next slide, got to do your dance. We did spider graphs.
Is that the right thing?
Yeah, next slide is the spider one. I'm sorry, it's on this side.
This is her.
Yeah. Next, yeah. So here you have a little spider graph. And what's so nice about spider graphs is you can just see at the top there, Africa, that's the concentration. You want to make a comment?
Yeah, so look, what I saw the data that came out of the premium conversation, as a sponsor, as a developer, as an investor, I said, so what, right? So if the data says 16 to 20%, I said, so what? And let me unpack that for you a little bit. I think from a government standpoint, if I were talking to the governments, I would say to the governments, look, as long as the tariff is something that is affordable, and the end result, the citizen of your country is paying something that is affordable, right? Don't get into my financial model, right? So I'm giving you a good quality service, and I'm giving you an overall tariff that's affordable for the country, and there's value for money. Do not get into my financial model. That's what I would say to a government. To the investors, I would say it is competitive. You heard this morning, that bankable projects are far and few between. We all know the track record. We all know how many projects are closing. There's a lot of money sitting at the table. How much of this is actually getting booked as assets under management? To a fund manager, I would say it is competitive. So we can have a horse trade. If I have a good project, whether it's 15, whether it's 12, it's 16, we'll have a dialogue, right? To the overall sponsor, I would say it can't be the cost of the Nigerian guild if you're investing in Nigeria. It has to be several basis points above that. So don't talk to me about investing and getting returns at the same cost as the local guild in Kenya or Ghana or Nigeria, because I need some return back, right? So I think that's how I would see it. And on the face of it, just saying 16, 20%, is it too expensive or not? I would say, given the journey of doing these projects, so what?
Now, the counter to that is, if I'm a public servant and I'm trying to have the lowest cost of service for my citizens, I'm going to say I care. And what do I do if I care? The reason we have higher IRRs is because the risks are higher. The failure rate is higher, right? So if you look at it from a composite viewpoint, we want the developers not to work so hard so they don't require so much. Would that be true?
Right, but there is a market efficiency dialogue to this, and right. I see Carlo in the room. We have lots of sponsors in the room. So the government can chase the next 12% IRR project in Nigeria. The guild trades at a higher number. No. It's not going to happen. So another 5, 7, 10 years are going to go by, and
No, but we've got to put the premium. We won't get scale. Totally agree. We won't get scale, okay? So there's another component. You could argue you have to look at the cost of delay.
That's right.
Okay? So
you want to have us participate in those projects. Right?
Exactly. So, the whole point is to crowd you in, okay? So we want you to be happy with your returns, but returns, basic finance, is the higher the risk, the higher the return. There's no way to get around that in Africa. If it takes long, if it's risky, it's going to cost more. So the second sort of headline is in the questions asking on a scale of 1 to 10, how important is it to have public support across the government, political support, risk mitigation, support from development institutions, investment incentives, and funding of non-economic infrastructure like a road or a transmission line or whatever. Africa, again, was off the charts. So again, we have another spider. You can see that on all those levels, Africa, the support that's required in order to get the project done is considered more important. And it's interesting, we put in advanced economies so that we can really see how much more difficult it is across the board for developing countries, but even more so for Africa.
Right, so this is something that perhaps needs a lot of attention. And from a developer standpoint, we continuously look at the DFI community, the community that today might be preoccupied by technical assistance, by funding project development, by trying to be a catalyst to actually go do this, right? We would like advocacy. So whether sort of speaking as a developer, as an investor, speaking as GE, we routinely look to the DFI community, sovereigns, to help us with this, right? To talk to governments about the right enabling environment, creating the political will, sticking to milestones and timetables, not changing the playing field on us. This is what we really need the DFI community to help us with. Third headline.
It is harder, and somebody mentioned it earlier today, I forgot who, that participants said that African infrastructure projects face significantly greater difficulty in securing qualified professionals. And we asked it for how hard is it to get a project developer, And then we said for a local project developer, try doing an energy deal, especially a smaller energy deal in Tanzania if you don't speak Swahili. It's not a good idea, okay? And then local professionals. And again, if we look at the chart, here, you can see the cluster again up at Africa. It is compared to other developing countries. It's just that much harder to get project developers, even harder local, it's not surprising, local project developers, and it's easier for local professionals than the other two, but again, much harder than the other areas.
So a few points here. This is particularly close to my heart. This morning I heard the speaker from USDDA say, how much experience do you have as part of the dialogue? I thought that's what I heard you say. I think for us, we asked the question of, how resilient are you? And do you share our values? Because the experience you don't have. Let's just call a spade, right? So when I met my friend Carlo 15 years ago, and he was already working on Lake Turkana for a few years, with all due respect, you, sir, had never done a project financing. Today, you're experienced, you've done 15 years of this, but how many such deals have actually closed in the region? So boots on the ground matter. Leveraging the skill set that's been built in region, the team that Carlo has, the team that we've built, to see, Taz was here a little bit earlier, I don't know where Brian is, Brian Hurley from Black Rhino, the developers that are on the ground. I know Alon is very active in the region. The boots on the ground matter. That experience in the region matters. It doesn't matter where you're from. But living in the region brings some commercial intensity to these projects. Living in the region gives you context of how to navigate some of these everyday issues. Otherwise, you've got to get on a plane, having had 3 sets of meetings with the local off-taker on tariff, get on a plane, go back to Washington or London, and another month is going to go by. So the boots on the ground really matters. Developing that local context really matters. And how resilient are you matters more than the experience that's actually going to fly in, because the experience we can all bring in.
Okay. And this is our last headline, okay? There are more challenges for African project developers than other developing country regions. And we have to see that in the context. I don't care where you develop an infrastructure project, whether it's in Italy or it's in the US or wherever. It's hard, wherever you are. So to say that it's this much harder for Africa says something really true. And again, the success rate it's interesting. For emerging Europe, it also had a low success rate of 20%. So that spider graph, again, gives you a visual picture of how much harder it is. Whoops.
Difficulties? There you go. There you go. Is that good?
You know what? We have the wrong, sorry, we have the wrong, we'll send it to you in your report. It's the wrong spider graph.
Oh.
Sorry, too many similar graphs.
But it's off the chart.
It's off the chart.
Okay.
That's the point. But we can show the next one on government-related impediments to show. The spider chart you missed showed the range of developer roles from first, how difficult it is to secure an offtake agreement. That was the top one. And of course, the most important, and much harder in Africa than other regions. Number 2, in terms of scale of importance, was negotiating with the government. Again, harder than any other region. So, sorry about that. So, in government-related impediments, again, going across what we've talked about, lack of government capacity, lack of enabling environment, lack of adequate government institutional counterparts, impact of government red tape or corruption. Again, Africa off the charts.
Well, the success rate part of that, we've all, from a developer community standpoint, experienced every day, and we've seen that the chessboard keeps moving, the playing field keeps getting reset. But I've been on having said that, I've been in many very senior head of state level or ministerial meetings where the ask from the developer is not articulated clearly enough. Let me explain. So you have a meeting with the Minister of Finance, you might talk about a granular transaction related to the development of the project that needs approval. You have a meeting with the head of state, you talk in generalities about the project and how you need support, but we're not setting up milestones. We're not setting up pure goodwill. We're not getting them to real political goodwill, expressing it and saying, hey, I'm going to stand up and resign if this power project doesn't get done, like the minister in Ghana did in the last cycle. And finally, we had a sword cutting this last week on our Early Power Ghana 400 project. So holding government accountable to some milestones is really important because that then creates the enabling environment to clear the path. So you can go and talk to various different levels of government to change the playing field that they've reset for you, but getting true political goodwill and making sure that that political goodwill is kept to the timelines is really important. I think we don't do as a developer community enough on that. We must do more.
Okay, so just to finalize this, because we're late for lunch and I know everyone's probably getting grumpy, where do we go from here? We hope that this is of interest. I think many of us feel there's an urgent need to be able to capture the difficulty of project development better. So we plan to continue to refine and advance these insights. It will be presented formally in substantive bilateral exchanges with critical public sector partners so they can understand better the specific challenges. And the plan is to update it annually. So the Project Developer Leaders Forum and its technical partners, AI Capital and the Global Clearinghouse, welcome you to be part of this consultation and development process so that it could really help bring together the ecosystem and the supports that project developers need to get to scale in developing investable projects. So please feel free to talk to Hubert or myself. Do you want to say some last?
No, I think resilience and commercial intensity is what we need. Boots on the ground are really critical, and the risk premiums are what they are. The markets will define it. Have a good lunch.
Yeah. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.